Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordiz, and joining me is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing the European Central Bank's upcoming meeting and the potential reaction in the euro. So Marios, earlier this month, the ECB raised its inflation target. If the bank wants to show that it's committed to hitting this target, what are we likely to hear from President Lagarde when the bank concludes its meeting on Thursday?
Hello, Maria. We're likely to hear a very dovish tone from President Lagarde this week. So you just pointed out the ECB recently raised its inflation target a little bit. It wasn't able to hit a lower inflation target for almost a decade now. So when it raises it, it becomes even harder to hit. So the ECB is trying to demonstrate how committed it is to achieving its inflation target now. Now, how do you do that? You signal that cheap money policies will stay in place for even longer. So that means negative interest rates for longer, quantitative easing for longer, and overall you try to tell the markets that I'm not heading towards the exits. I won't follow the Fed. I won't follow the Bank of England or the Reserve Bank of New Zealand. I will not raise interest rates anytime soon. That's how you signal to the markets that you are serious about hitting your inflation target.
Okay, so if the ECB locks itself into negative rates while the Fed moves towards rate increases over the coming years, what will this mean for the euro?
In a nutshell, it's really bad news for the euro. So when you have this, we call this policy divergence. So the Fed is going to be raising interest rates, the ECB won't be. So interest rate differentials between the dollar and the euro are likely to widen in the dollar's favor over the coming years. Now, the last time that happened, the last time the Fed and the ECB went in different directions was back in 2014-15, and that was a period of carnage for euro dollar. So overall, I think that the longer term risks around euro dollar are still to the downside. Now, having said that, what is the main risk to this view? I think it's probably the Delta variant. So we are seeing this new variant spread uncontrollably across Asia, a lot of countries in Europe like Spain, Portugal, the Netherlands, and hospitalizations are still low, but the longer this persists and the higher the cases go, the more likely we are to see some travel restrictions or some social restrictions, not full-on lockdowns, but something milder that still restricts economic activity. So what am I getting to? If this variant spreads to the US as well, or even if it infects the rest of the world and it slows down the global economy enough, that could make the Fed hesitant to raise interest rates. It could slow down the Fed's normalization timeline. And if that happens, that would argue for an upside reaction in euro dollar. However, I think that the overall trend is still is still lower.
Marios, thanks so much. And thanks for joining us at xm.com.